Welcome to Bulls, Bears, and Bill, a weekly show on the financial markets brought to you by Dalton Community TV and Bill Schmick of Onota Partners. And I'm Barbara Schmick, also of Onota Partners. Each week, Bill will share with us why the markets did what they did and where they're going in the weeks and months ahead. Stocks, bonds, options, commodities, currencies, crypto, you name it, it's Bill's world. He spends his days in front of several computer screens digesting world events, checking both foreign and domestic markets, trading up a storm, while figuring out how the latest posts from hundreds of sources will impact markets. Bill has been trading and investing in global markets for many years. He has worked for decades on Wall Street for some of the largest and well-known firms in the country. He has traveled the world several times over, advised some of the greatest names in the business, and witnessed many of the events that have shaped markets today. Bill has also been an investment advisor, managing individual clients' money and advising them on all sorts of financial issues, from retirement and estate planning to affording health care to putting their kids through school. In his spare time, he writes 2 columns a week for several media and newspaper organizations throughout the country. Locally, you can read his columns in the Berkshire Eagle and on iBerkshires.com. And Bill, good morning, and take it away.
Thank you, Barbara. Welcome back. It's December 1st, first day of December. I hope everyone had a great Thanksgiving. We certainly did.
We did.
And so here we are, December the 1st, the beginning of that really supposedly good month in the markets. But as I wrote, November was also supposed to be a very good month in the market, and it wasn't. So the question becomes, will December work its way as it has in the past, moving up through the month into what was called, or is called, the Santa Claus Rally, which was a period, it's roughly a period between December 22nd, my birthday, and January the 16th or the 17th. Now, historically, as I said, that this is supposed to be a good month in the market. We just had a 5-day period from last Friday, all last week, which was a holiday week, and so it was only, I think it was, we had all Thursday and half a day Friday. So it was 3.5, 4 days in which the volume was light and so forth. But each day the market went up. Now, if you recall, I had expected that the stock market would decline anywhere from 4 to 6%. Well, the week before last, when I looked at the numbers, the benchmark S&P 500 index had declined 6%, 5%. And the NASDAQ, the tech-heavy NASDAQ, had declined even more than that. So that caution that I had felt and that warning of a pullback certainly came true. And now the question is, it's bounced back and pretty much regained all that it lost in November. And we're sitting sort of flat to even for the beginning of December. And today, when I left, the market was down about 0.5% or so. I did write on Friday that we should expect a pullback this week because the market had been up so much in 4 or 5 days. So this pullback is, I guess, expected. Whether it continues and for how deeply the pullback will become is anybody's guess, but it could, depending upon what happens in the next week and a half or so, pull back further, or we'll just have a nice little bounce and then up for the holidays. And so what is it about the next week or so that's important? Well, next Wednesday, the Federal Reserve Bank meets. And last time, before January the 1st. And the market is expecting another interest rate cut. I think this Fed meets on December the 9th and 10th. And they're expecting a rate cut. I mean, when I looked at the odds, we're back to something like 87% of investors expect to cut. And that market rally last week was based on that expectation. So the risk becomes, will they cut or will they not?
Okay.
Mm-hmm.
Speaking of Santa Claus,
Yes.
do you think he'll come to Wall Street this year, or are we going to get coal in
I
our
know,
stockings?
I know. My own thought, here's the deal with the Federal Reserve Bank. There are 12 members, voting members of the Federal Open Market Committee. And how it stands right now, we've got pretty much a dead even split between those who do not want to cut interest rates because they want to see more data. And remember, we haven't gotten any government data, or very little government data, because of the government shutdown. And only now is any of that data coming back out. Okay? And there isn't enough data for the Fed to make an informed decision between now and December the 9th and 10th. So it's going to be a guesstimate. And the Fed is a conservative body. And we have, as I said, pretty much a split between those who want the cut and those who don't. And coming in, I think that there is a risk that they announce on the 9th or 10th that they're not cutting and they want to see more data before they decide. And if that were the case, if that were to happen, all of last week's rally, all that, that 5% up after 5% down, they'll give that right back. On the other hand, if they do decide to cut rates, it's already in the market. However, I'll tell you why we normally have what's called a Santa Claus rally. People argue, or have argued in the past, that it was all about the good cheer of the seasonal holidays, and investors and traders were buying stocks to celebrate the coming Hanukkah, Christmas, New Year's. Don't believe that. It's not that. What really happens is there's a global flow of money, of cash, that comes into the markets. Where's it coming from? Well, bonuses for one. Normally, all across the world, employees, if they are going to get a bonus, it's given to them in December. So that's a flow of money into millions of people, okay, that comes in. Number two, that money and other monies go into the market in the form of contributions to your 401k, 403bs, IRAs, whatever. That's another additional flow of monies. And because it's the holidays and there's a lot of buying and selling going on worldwide in the markets, meaning in the retail market, in stores and movies and wherever you're spending money, most central banks provide additional liquidity, which is just another way of saying they provide more money to the markets, and not just the financial markets, but the retail markets, everything that a consumer will buy. And that, again, is another flow of money. Now, this additional flow of money hits the stock market and the bond market like a tsunami wave. And it pushes things up into the new year, and probably into the second week of the new year. And that pretty much happens every year. Now, every year I said, but there are some years where it didn't happen. I think it was in December of 2018, I think, was when the central bank, our central bank, decided to raise interest rates. And when they did that, basically by raising interest rates, they were tightening liquidity. They were reducing the amount of cash that went into the system, and those flows stopped. and the markets went down. So, in this case, you have opposing forces. You have this natural flow of cash into the markets, and you have the Federal Reserve Bank that may or may not reduce interest rates. If they don't reduce interest rates, in effect, it keeps money where it is, and that risk could send the markets down. And if that would have happened, we'd have coal in those stockings instead of presents. It could happen.
So do you think people are going to keep spending this holiday season?
Yes, they are. But here's the issue. Okay, don't be fooled. You're going to hear all sorts of things like, Black Friday sales were up 4%. Yeah, they were up 4%, okay, but how much of that was the inflation of retailers adding, price increases to the cost of goods? What you have to look at is the units. How many units of whatever, units of vacuum cleaners, units of computers, units of whatever, chocolate, that were increased. Not just the revenues, because the revenues don't take account of the higher prices that people are paying. Now, the other thing is that I've been reading that a number of the large retail shops like Walmart and Target and others have, in their last earnings report, which was only a week and a half ago, had said that they were seeing their middle income and lower income buyers, consumers, pulling back in the markets. Now, they were still spending, but that what they were doing was reducing the amount they were spending and buying cheaper goods and services with that. So it's not really clear whether, if you just look at the unit increase versus the sales price, if the consumer is going to end up being flat versus last year, or even down, or if, as the bulls say, increasing higher. My own bet is that this holiday period will see an increase in sales, which will be meaningless because all that means is that you're paying a higher price for something. But in the units, I'm betting that it would be flat to slightly down.
And today is Cyber Monday.
Today is Cyber Monday. So you'll notice that you have to notice because your iPhone is probably blowing up with sale after sale after sale. By the way, Black Friday started, I think, before Halloween. So so what's happening here on Cyber Monday, I don't think the sales are going to be as advertised, meaning that the bulls are saying they're going to, fly. They're going to break all the ceilings because they're not going to give me what I need. I want to know how many Apple Watches people are buying, not the cost of them, not the price they're paying. So it's yet to be seen what's going to happen there.
That's true. A friend of mine went to Walmart last week to get a Black Friday special on an Apple Watch and ended up spending $100 more than it was actually advertised for.
Yeah.
So there's that.
Yeah.
So let's switch gears and talk about Venezuela. You wrote 2 columns on Venezuela over the past weeks. You used the term gunboat diplomacy in explaining what was going on. And as I told you, I looked it up, and to me it sounds like bullying or intimidation. But can you go over that and explain it further?
Yes, gunboat diplomacy has been a fine tradition in this country. As early as 1830s, 1830s, when our Navy was in an infancy. Okay, we just basically got out of the War of 1812. Anyway, a couple of years later, the Northern African nations, some of them, were the home for pirates. And these pirates would prey on trading ships that are coming up and down the African coast. And many of those trading ships were Americans, from American, you know, not the Navy, but from, you know, our transport ships. Anyway, what we decided to do was to bombard those African nations and threaten them with invasion. In fact, we actually did land some Marines on shore in Tripoli. And we threatened that we would just bombard Tripoli and other cities unless they agreed to stop attacking our vessels. In fact, as a Marine, one of the things that you first learn when you're in boot camp is the words to the Marine Corps hymn. And for you jarheads out there, you probably remember when they're saying, from the halls of Montezuma to the shores of Tripoli. We're talking about gunboat diplomacy. The halls of Montezuma was when we invaded Mexico and absconded with California and invaded Mexico City, again with Marines. Well, we did that all through the 1800s. We did it again in Japan. Japan had an isolationist trade policy. They didn't want any Westerners in their country. And we steamed right into Tokyo Harbor and threatened to blow it up and the city with it unless Japan agreed to open up their country to American trade. We did it again in the early 1900s. You may have seen the movie Sand Pebbles, I think it was, with Steve McQueen. And it was a story about not only the United States, but several other European nations that practiced gunboat diplomacy in China. Not only were we along the coast, but we actually went up the Yangtze River, threatening to bombard all of China unless they too opened up their trading for us at our terms. And the British and the French and Germans did the same thing. We did it again in Panama in 1901. Colombia had designs on occupying Panama, and we wanted it. And so, once again, gunboat diplomacy, in which we landed sailors and Marines once again in Panama and pushed the Colombians out and staked the claim to Panama. The point is that we've got a long, unillustrious history of gunboat diplomacy. We use our threat of force in order for a smaller, weaker country to back down and give us what we want. Now, if any of this sounds familiar, in Venezuela, you'd be right, okay? And Donald Trump and his administration is simply another American administration that is practicing our history of gunboat diplomacy. We're not the only ones. If you think about it, Russia's doing the same thing with Ukraine, and China is doing the same thing with Taiwan, and even Venezuela, which we're talking about, has threatened to do the same thing in Guyana, which is a neighboring state of theirs. What are we after in this gunboat diplomacy? Well, if you believe the president, or what he said initially, was that they were interdicting boats, drug boats, that were smuggling fentanyl into the United States. That was the first claim. And I think now we've had 88 people die, and I don't know how many boats that we've blown up. The truth is this: there is no fentanyl coming out of Venezuela, none at all. Okay, all of the fentanyl that's coming into the United States is coming from Mexico, and 90-some% of that is being carried across the border by American citizens. So forget about fentanyl. It's not the reason. Okay. And in fact, even the Trump administration backed down on that and said, oh, well, because they couldn't find any fentanyl. Oh, we're not, it's about drugs. It, drugs, that's what it is. Well, how many drugs were found on those boats is questionable. But the truth is, Venezuela is what is called a transit country for drugs. Okay, what do I mean by that? They're grown, produced in places like Colombia and Peru, and transited through Venezuela on their way not to America, but to Europe. Okay, so now what do we say? Okay, well, the next thing is that we want a regime change. We want Maduro, the president and dictator, so to speak, of Venezuela out. Okay, and that makes sense for a variety of reasons. And let me tell you what I believe is the real purpose. The real purpose is that, whether you know it or not, Venezuela has enormous oil wealth, 303 billion barrels of reserves, okay, in Venezuela. It's a heavy oil, but nonetheless, it's there, and it's the greatest catch of oil in the world. Now, why do we want Venezuelan oil? Well, do you recall the drill baby drill policies that Donald Trump campaigned on? Haven't heard much about it, have you? Here's the reason. 2 years ago, our oil production has peaked. And last year, down again. So what's happening here? Well, what's happening is, from the Trump administration's point of view, is that there's not enough places to explore in the continental or offshore United States, and therefore, if we open up more areas, environmentally sensitive areas, to oil drilling, then our U.S. companies will drill there and our reserves will come back up. Good idea, I guess, if you believe in that. And so he just announced, I think, a week ago that he's opening up an enormous area of offshore American territory off California and other places for additional exploration. Now the question becomes, you can buy up those leases, okay, but are you going to drill them? Well, the issue is this, and this is a contradiction in the policy that the Trump administration is presenting. On one hand, they want drillers to drill new territory. On the other hand, they need oil prices lower. If you're a driller, if you're a landman, if you've been watching the show, you're not going to drill if the price of oil is going down. It doesn't make any economic sense. Now, they may buy leases, hopefully at a discount, but if the oil prices continue to fall, but they're not going to drill them. And so here we have a conundrum. We're opening up territories for our Americans to drill. They may buy those leases, but they're going to sit on them until the oil price goes up. But the Trump administration is determined to keep it down. Now, here you go. Since World War II, up until OPEC was created, basically our gunboat diplomacy was to take the nations of the Middle East and threaten to take them over or cause disruption unless they gave us their oil at a preordained price. All of that blew up after OPEC and after OPEC Plus. So we're not going to get Saudi Arabia and other nations over there to reduce their oil prices. They need higher prices. So they're out. Russia, they've got a lot of oil, but we're fighting with them, so they're out. So where are we going to go in order to replace the energy reserves we need? Venezuela. Now, we have had sanctions in Venezuela since 2012, I think, or even before that, 2005, when the last president, who was a socialist, Chavez was his name, they took over the oil industry. They socialized this, they socialized that. He drove the country into the ground and the energy industry into the ground. And then he was succeeded by his hand-picked President Maduro, who's done the same thing. So the place is just crumbling. Enter China, enter Iran, and enter Russia as allies. And they rushed in, provided infrastructure, roads and factories or whatever they could. The Russians supplied weaponry and strategic arms and so forth and so on, and so did Iran. And in exchange, they were given, and it basically barter, the oil that Venezuela was still producing, which isn't a lot. So here you have a situation where you've got all of this oil, and the Russians and the Chinese and the Iranians inside of Venezuela. And the idea, I believe, is to have a regime change, move the present president of Venezuela out, or invade them if that's the case. But I think probably he'll agree to step down. The Trump administration will put in a new person in there, someone that is more amenable to the United States and to a positive energy policy with us. And it'll take $20 billion a year over the next 4 or 5 years in order to resurrect the energy capabilities in the country. And at the same time, what the administration is going to want to have happen, besides the ability to take that oil, is for the new administration in Venezuela to kick out the Russians, the Chinese, and the Iranians out of the Western Hemisphere. So that's what I really think is behind this whole issue with Venezuela. And it's gunboat diplomacy once again. Will we actually invade the country? I don't think it'll be necessary, but we are certainly rattling the saber, and we'll see how long the present government can put on a brave face before caving in.
Wow. And when can we expect a decision by the Supreme Court on the legitimacy of Trump's tariffs?
It's supposed to happen, or people anticipate it will happen this month. Maybe delayed, and the betting is that the Supreme Court will say that these tariffs, the way they stand, are illegal. I think even the Trump administration is at best 50-50 on whether they think the Supreme Court will rule in favor or not. And you've also noticed that since we've last talked, that a number of tariffs on items, a lot of them food items, that you and I are buying, suddenly the tariffs have disappeared on those items. And it'll take a while for things like coffee, which was reduced, and soybeans and bananas and other things actually get to the grocery store, even beef. But I see where the administration is now backtracking on tariffs and finally realizing that for those goods that we do not make in America, or we make them sparingly, that the tariffs make absolutely no sense. We could have told them that before they did it, but that's what's happening. So what'll happen, that's another risk we have in December, that the Supreme Court comes out and says, no deal, the tariffs go. At this point in time, Wall Street and the markets have sort of absorbed the tariffs in the sense of thinking, well, from being a terrible thing which would cause enormous calamity, that in fact they're okay, and they are generating money, which is reducing the budget deficit. Now, if that were to be unwound, and especially if the Supreme Court says you have to return the money that you charged in these tariffs back to these nations, I do not think Wall Street would like that at all. So we have two risks here in December, the Supreme Court risk and the Fed risk. So I'm hoping that we have a bullish December, but I would feel a lot better about it after at least December 13th, 14th. So we'll have to watch that closely. And of course, I'm going to be here next Monday and the Monday after, and I'll give you my opinion as things progress, whether things will be good, bad, or indifferent. So other than that, remember, if you have any questions on any of this, I want you to email me, okay, at daltonctv@gmail.com, once more, daltonctv@gmail.com. Thank you.
Thanks, Bill.
Thanks.
Have a good day.